morning, everybody. Welcome into another live stream here. Happy Monday. Hope you guys are having a good morning or evening wherever you are. Hope you had a great weekend. It was a pretty chill weekend for me. I also had a birthday celebration. I actually ended up hitting the club for the first time in over 8 years this weekend. That was kind of crazy. Definitely didn't expect to do that this weekend, but it was a friend's birthday and they kind of dragged me into it, so I kind of gave in. It's and probably good for me to say that I'm not hitting the clubs in like at least another couple of years, probably like another 8 years, because man oh man, I think I'm too old for this shit. But it was a good weekend. Just feel like I think I got peer pressured into too much drinking, and that wasn't necessarily a good thing. But I am back here on a Monday, and I am good and energized, and I am ready to take this on. For those of you that missed our final closing out of last week, was $14,000 in profits, 14.5K roughly. These were the trades that we took. Every one of these were pretty much spoken about on the pre-market live stream, or we also traded it together live on Discord. So, you know, the pre-market live stream is kind of here for you guys to get the ideas, and if you want to hear the live execution of all of the ideas that we provide, then you could join the Discord if you want. But if you know how to enter and exit on your own, then you honestly don't need that. You can pretty much, get the ideas on the pre-market. Of course, we don't share all of them here, but that's a separate thing because we have a snipe list for that. The snipe list ideas are not the same as the pre-market ideas. So we still give a lot of the information on here so that you guys have something to learn, something to take away with you and benefit from. So as you can see, my risk allocation this week was much better from last week. If you can see the comparison here. Last week I had some red risk allocation, which was pretty much above 5% in risk allocation for my portfolio. This week, very much so controlled risk. Only one trade. That also was a trade that was a swing trade, and I had averaged into it twice. That's the only reason why that trade ended up being a loss and was a higher risk allocation there. So just kind of, recapping last week before we get into this week here. This week we'll be looking at some new opportunities. So let's jump into the macro real quick. And let's really just talk about where we are in this market right now. So going into, or rather rewinding what happened last week, a lot of, the market has been bearish, right, on these two bottoms here. And a lot of people were expecting us to flush down. We also saw the out the money bearish flow. And I did mention, sometimes options flow can be very misleading, right? I've mentioned it multiple times on this stream and even on Discord, if you're part of Discord. When you see out the money options flow, it doesn't necessarily always mean that they are outright bearish. Like whoever who's taking the options trade could be using that as a hedge for a long position, okay? And we saw a lot of that position building from last week. But we also knew that hedge funds have been increasingly bearish in these levels, okay? And hedge funds have been net short for the past almost month. In fact, heading into this month, they have been net short and increasing short positions, and now they're scrambling to grab upside positioning. So there was not a lot of short covering just yet. We haven't even seen the shorts cover, to be honest, but some of the short covering has happened in the past 1 week, which is the reason why we're flying upwards here. Now, the interesting thing is we could fly all the way up to 4,200, but this is 4,200 to 4,140 level, as I mentioned in previous live stream from last week, is going to be the key test level here, right? 4,140 to 4,200 for the SPX is going to be the key testing level this week for us to really break into the higher highs. Okay, any rejection in this level will see us go straight right back down, and it will form a double top and then a possible double bottom. All right, so we have to really play it tight to the vest for the first half of this week to watch for this retest and see how much of supply comes in this region. And that's the reason the first 2 days or so of this trading week, I say trade very, very lightly. Things are very overbought. Just to show you how overbought, look at the sector sentiment that I just posted on Discord. Very, very crazy sector sentiment. Almost everything is approaching overbought levels. Every single thing, almost, right? Healthcare, housing, industrials, oil producers, mining, REITs, retail, semiconductors, technology, utilities kind of has a little bit of room, but it's almost there already, right? Every single sector is approaching overbought levels. And this is very important to know. Okay, very, very important to know. So this kind of information is the kind of information that you really need to put on the top of the forefront of your brain before you even jump into anything. So now, as we are getting this rally, you have to realize a couple of things. The first thing is we are really at the precipice of understanding whether the Fed is going to continue to engage in its hawkish rhetoric, or are we going to see them cool off and start to be slightly more dovish. And we haven't really got the, the inkling that the Fed is going to lean dovish just yet. Their previous FOMC meeting from last week was leaning hawkish, but sounded dovish, okay? So all in all, we don't really know if they're really going to continue the tune. But however, important thing to note is inflation assets are once again reverting to their means. So gold is an example, right? Commodities, in other words, gold, and then you also have your oil and gas, right? XOP. Look at that. XOP is also rebounding here a little bit, right? And both of these assets are obviously linked to USD. And so we also have to look at the dollar index when we're looking at these two. Okay, so having a look at the dollar index, you'll see that the dollar has come down quite a fair bit. And that is causing the other assets to kind of prop up in price. Okay, remember, dollar goes up, gold goes down. Dollar goes down, gold goes up, right? So they're all inversely linked, okay, because they are dollar denominated. Even the same thing with oil and gas, they are quite dollar dependent, okay? Now, gold does have some nice upside here, and I spoke about this on the previous live stream as well. I'm looking to take a long position if I can get some confirmation and continued, demand building. I don't want this to happen on low volume, though. A lot of this has happened on low volume, and that's the reason why I haven't taken a position. You can see volume is decreasing here on the breakout, which I don't really like so far. So I'm not going to jump into this and have myself be into a fake breakout here. I'll wait for confirmations, and then I'll take these trades, right? But what could be setting up here on both oil and gold are dead cat bounces, right? Where you have a big sell-off, and then you have a weaker bounce, right? Weaker bounce in this region, okay? And so the upside on gold and oil and gas is quite limited, I would say. But it doesn't mean that we don't have any upside, okay? Now, just a very quick thing about the macro situation here. You have to also realize is that the bond market is echoing, ahead of what the Fed is doing, is echoing the sentiment that they might even go for another sell-off here. We really haven't been able to breach the 119 level on TLT, which is the fat tail of the bond market. And then on TLH, similar looking situations happening, which is the 10 to 20 year bond. So this is the middle tail of the bond market. We haven't really been able to break out of 125, which has been the key level for TLH, right? So we're not really seeing yields cool down yet. Yields have not been able to really cool down. I mean, and you remember bond prices and yields are inversely correlated. So that's another thing. You need to remember that credit markets are what gives the liquidity to the system, right? A lot of the cash and the money that is in our system is not in actual cash. It's sitting in treasuries. It's sitting in credit, okay? And so banks have to manage their credit facilities very, very carefully, and this is done through the buying and selling of bonds. Now, if the Fed signals that they want another interest rate hike, which is going to be more aggressive in nature, which, by the way, right now, it's, looking like a possible only, I think I shared a infographic about this. Let me just very quickly, where did I see that one? Okay, I'll find it and I'll post it on Discord. But they were pricing in the, I think it's on the playbook. Is it on the playbook? Let me see. Yes, it is on the playbook. There we go. So here's the current market expectation of the Fed funds rate, right? This is important. So it's important to read this really quickly. I'm going to read it out to you for those of you that are maybe listening in and you don't want to really talk or you don't want to type anything. So, however, Chair Powell also was clear to emphasize that the path of the Fed would now be data dependent, and the key piece of data that is tracking inflation, both headline and core inflation. While the Fed acknowledged some softening in commodity prices lately, it is also noting that areas like energy prices are more volatile, driven in part by external factors like the crisis in Ukraine. In addition, Powell highlighted that the U.S. economy, while it's slowing, does not believe that it is in a recession. he said, I do not think the US is currently in a recession, and the reason is there are too many areas of the economy that are performing too well. This is a very strong labor market. It doesn't make sense that the economy would be in a recession with this kind of happening. In our view, perhaps the best signal after the Fed meeting was the sizable move lower in Treasury bond yields, likely reflecting the market view that inflation and growth may be slowing, and the Fed move more gradually going forward. We have seen the 2-year yield move more lower by about 50 basis points and the 10-year yield by 75 basis points since their mid-June highs. The move lower in yields have also supported the strong equity market performance this month, particularly in growth-oriented and longer duration sectors. However, we would expect yields to gradually move higher again as the Fed continues its rate hiking, but perhaps remain below their mid-June peaks. So the expectation here from the bond market and what the bond market is pricing in is a September, another 50 basis point rate hike, and then another, wait, hold on. It's 2.25 to 2.5 right now, right? Yeah, so 50 basis points and then 75 basis points. And then, so basically 25, 25, 25 all the way. And then a pause somewhere in the first half of 2023. And then after 2023, another descent in the rate hike, or rather a pause in the rate hike and then a softening of the rate hike. So we're looking at increases all the way through December this year, and then a cool off after heading into next year. Okay, so this is one of the macro things that you gotta keep in mind. So for those of you that don't know what the playbook is, every week before the markets, before Monday, basically. So before the market opens on Monday, I release a macroeconomic report on our Discord and a commentary by JP Morgan and BlackRock, as well as important things like the macro situation, for example, just news in general, and also what about important things that everybody on Discord needs to know. So that's usually posted on our Discord every single week, right before the market opens, and so that everybody has access to it and can read it and get a good understanding of things. So that's a little recap of macro standpoint. Yields are still going to probably come down as the market tries to scramble here for exposure. But as I mentioned, we are not going to clear these levels very easily. This is a very, very key level for the SPX to clear. So let's talk about the technicals now. Now that we've talked about macro, we've talked about all the good stuff in terms of the background of the market, the structure of the market, liquidity, we've talked about credit markets. Now we can jump into technicals and address the elephant in the room. Now, very, very key thing here is all three indices are reaching key levels, key pivot levels, right? If you look at the Dow is approaching the 33,240. NASDAQ is approaching its 13,000 level, key level, right? NASDAQ, it looked like it broke out, but then it didn't. It really broke out on low volume. So really not much volume here on this NASDAQ breakout, right? And then on top of that, we have the S&P 500, which is heading into its 4,200 level, which I have been talking about for a long time, that we could snap back into that rally for a while. But obviously, we have been looking at it very, very carefully because all of this has been happening on low volume, right? So the story for this week is we need to take out 4,200 and bounce on 4,200. If we see a strong rally into 4,200 and we see a lot of volume behind it, then we know that some smart money is following behind through. And then we also need to wait for some confirmation in terms of bullish options flow. We want some out the money bets in multi-million-dollar sweeps, right? Same thing with the NASDAQ. We want a nice breakout here with some good volume momentum. And the same thing with the Dow Jones. Okay, above 33,000, a bounce on all these levels will be bullish. Okay. So that's what we need on the indices. We need that. But any rejection in that region, any rejection up here, any rejection with SPX at 4,200, and then a rejection at the Dow is going to be a problem. Now, what constitutes a rejection here? And I really want to make this clear because this is super important. And I know that beginner traders have a problem with this. So, really important is that the SPX closes above 4,200 on the daily. Okay, it has to close above 4,200 on the daily, and then the next day bounce on 4,200. So we need consecutively a couple of days where we are above the 4,200 level, demand is building, etc., where sellers come in and they are not able to dominate the market. That is what we mean by breakout and hold. Okay, the same thing needs to happen on NASDAQ, and the same thing needs to happen on the Dow. Now, if earnings go as planned this week, and majority of the companies that we are looking at, they do beat earnings, and then the market rips, then we're looking at a possible continued rally. But if we see a rejection at these levels and then we fake out and then, you know, we get like some kind of a big buy up and then immediately supply comes in and takes us out and then we don't close above 4,200, then we are likely to see a reversal, and this is just going to be a bear market rally, which is a dead cat bounce, okay? So you have to be able to discern between both of these case scenarios, all right? Discern between both of them. The other thing that I want to talk about is Chinese equities, which is another proxy possible trade in this week. Okay, we have been seeing a lot of bullish Chinese equity flow, and then individual stocks like Baba is reporting earnings this week. So there might be some plays to be made here. With Baba kind of falling lower and lower here, it might be, you know, a great time to pick up some bullish positioning ahead of the earnings. So obviously, we don't want to pick it up until it gets down to 82 or so, but keep your eyes peeled for this possibility. Even Baidu is looking signs like it's going to bounce over here, and also the other one I'm looking at is PDD. Okay, so these three stocks in general, and then JD as well, which are the main core Chinese holdings that I would usually trade. Okay. Apart from that, we have mainly a couple of other opportunities. Meta is one of them. Break above 161 and then play the upside. There's a gap here. There's a lot of upside room on Meta. And it could really make a deep run if it wanted to after earnings came out badly. Then also, we want to look at the downside pivot, which is 154. So 150, let's just say 155. 155 rejection. We want that breakdown from 155, retest of 155, and then a continued descent here. So either way on Meta is a playable option here. You just got to take it based on where you're going to see the entry for yourself, the risk-reward ratio, etc. As I mentioned on last week's stream, I'm still watching semiconductors very closely, okay? And semiconductors, we are looking on the snipe list. This is part of our snipe list this week, and we are playing individual names as well. We're looking for a 233.50 bounce. So we're really looking for SMH, for example, the semiconductor ETF, to come back down here and kind of bounce. It needs to give us a bounce in this region here, and then we can take some upside. So we want that nice pullback, and then we enter for the upside play at around 240 calls, 240 or 245, depending on the option chain, how liquid it is for whichever expiry is. And it's probably going to be a swing trade, so try to definitely buy more time for these kinds of trades. You want to take at least like 3 to 4 weeks out, more than enough of time for the trade to kind of you know, make its way. Remember, semis are not always going to just rip all the way up, okay? Great. So then there are some other trades. Occidental, we saw some bullish flow in this one last week. You know, a break above 66 something, 66-ish would be bullish, and could see a retest of the 69.70 level. And then after that, 74, which was the previous breakout high. So we're looking to possibly play this one as well. I don't want to touch any of the big tech this week. The big tech have run up very far, and I don't want to touch any of them because these indices have very little room to run to the upside. And if the indices run to the upside and then big tech doesn't run to the upside, then I'm going to take short positions, because then I know this Apple, Amazon, you know, Microsoft, they would be fully saturated, and it's just waiting for selling pressure to come in. So you got to understand these market cadences, how it works. Remember that Apple and Microsoft make up 4 trillion altogether in market cap. And so when the market moves, it's going to be very heavy on them, okay? The other opportunities, continued opportunities for this week, DoorDash short position below 67-ish, let's just say, 67-ish. Yeah, maybe below 67. Rejection below 67 is what I'm looking at. So reject this level and then come down. And then if it breaks above 72, then that's the bullish pivot here on DoorDash. So I'll take it objectively. I'm not going to try and guess. And then CrowdStrike has been looking like it wants to reject and move further down, but I think it's been having a lot of bullish momentum from NASDAQ last week, so it hasn't really found its momentum to get right back down just yet. The volume has been kind of fading a little bit, so I'm going to look for rejections only if I see NASDAQ reverse. Then I'll play the CrowdStrike short position. This thing could move very quickly down, and that's something that you got to keep your eye on, okay? The other play that we took on Discord last week, I believe one of the mods put on the trading floor, is Target. And Target's up nicely. I think it was a trade that we called on Friday. It was a Friday trade. Yeah. Yeah, one of our mods, Susie, called it out. 165 calls for 812. So this trade's going to be up nicely today at the market open. So that contract's already in the money by $2, which is going to be nice at the open. We'll see if Target can pull back and give us another entry, and then it might follow the same fate in style as Walmart, and that will be a nice pull into 175, hopefully. If it does that, then that will be a nice little rally. Okay, that's all I have for you guys in terms of breakdowns and updates. I'll be taking any ticker requests right now. Anyone have any tickers that they want me to break down, go ahead, write it in the comments. Thank you all 16 of you for being here tonight, or today, or this morning. I really truly appreciate you taking your time out and attending this live stream. If you can, leave behind a like and a comment if this helped you out in any way. I truly appreciate it. Yeah, smash that like button. You know, when you smash the like button, it truly helps me out. So I appreciate all of you. And yeah, I'll be taking, if you have any questions, you have want me to break down any tickers right now, go ahead, drop it in the chat box, and I'm going to do it right now for you. So yeah, I'll wait like a minute or two, and then I will see if you guys have any ticker breakdowns for me. That will be cool. Caterpillar was another one that went brazy last week. I'll be watching this one as well. But I'm expecting a pullback on everything first before I take any trade whatsoever. It's pointless to try and chase anything here. No ticker breakdowns? Nobody? No takers? No takers for a ticker? Or no questions at all? Alright, well, I am just checking in with you guys. You know, you could all, don't be shy. There is no wrong answer or wrong question. You gotta just ask the questions. Oh, Coinbase. Okay, let's do it. I think that one's very Bitcoin correlated. Coinbase is trading between this channel right now. Just looking at it, I don't like the setup. You're trading in between two very large channels here. So this level right here and this level right here. So you're trading between these two channels, and have a look. If you enter anywhere right here, your risk to reward ratio on either side is terrible. So you take a long trade here, you're gonna get trapped by the short side. You take a short trade here, you're gonna get trapped by the long side. You gotta wait for this thing to pivot to either the bottom or the top. That's my answer to this. Once you get there, then you can plan a trade and go either way. That's what I would recommend. INMD. Okay. In mode limited. Let's see. Oh, this one. What's the market cap on this thing? 2 billion market cap, man. Be careful. It's I'll do Tesla next right after this. Good morning. Hey, welcome in, lady and Natasha. Thanks for being here. Let's see. Okay. With INMD, this has got a $2 billion market cap, and what I always recommend is anything below 10 billion, ignore it. I know it looks like it's breaking out here, but okay, volume, it looks good. I mean, if you really want to play it, then yes, this is a good spot, right? So this is definitely a great spot to grab it. A break and a bounce on 33.57 looks like a good play. So I would say wait for it to break out here. Wait for it to break out, boom, and then bounce on the 33.50 level, find that demand again, right, after supply comes in, and it's definitely going to do that. Then play the upside, right? If you go by the fib extensions here, going by the last wave here, so let's see, you have this wave here, and then this wave here, and then you have, oh, this wave is not even completed yet, so it's got to be this whole wave here. And that's going to be an interesting one, so let's have a look. So 34.14 is going to be a key level, and then 37.36. So possibly go up, reject, come down, retest, and then break out. There's a possibility that happens. Volume is looking decent though. So yeah, I mean I like the trade idea, but I'm just gonna say one thing, Jerome. Just be careful. 2 billion market cap, I typically avoid it, mainly because it can be manipulated. That's all. I just don't like trading below 10 billion market caps. I've just learned nasty lessons, especially when it's health technology stocks or bio what is that sector? Bio something, biochemical or bio whatever. The health sector, basically, because those tend to be super volatile. Like, you know, any news can set it off. Okay, let's look at Tesla next, because I know y'all have yeah, biotech, that's the one. So Tesla, okay, so this one, Tesla's another one that I'm watching this week, right? And I'm gonna bring it to the front here because this is another stock that I traded last week. Tesla paid really nicely last week. Tesla paid a total of, let me see, this, and these, a total of $10,600. So you can say almost 2/3 of my gains from last week were from Tesla, and they were mainly because we caught really nice breakouts and we played it to perfection. Okay, so on a 4-hour, this is a falling wedge breakout, and it has already run up quite a fair bit. Okay, and then if we look at this wave further, okay, this fib extension wave, so you have a big wave here, one wave right here. It has, oh, and it's already there now, pre-market. So look, pre-market, it's already at the 38.2 Fibonacci extension, which is going to be 906 roughly, right? So it has already reached this level right here. You can see it, right? Pre-market is the orange line right here. I'm going to delete this away. So what do we want to see on Tesla this week? We want to see a pullback into the 880s, a pullback into 882, and then a possible bounce on that level. So we want to see a pullback right here, and then a continued rally. Now, if it gets ugly, then it breaks here, then we could possibly take another short position to play it down into the 842. I don't know if it's actually going to get that far, but we'll see. We'll play it pivot by pivot. There is no need to rush playing Tesla, and definitely don't chase this rally up here. So I would say wait for the pullback. It's going to open up here and likely come down and close the gap, and then see how much of supply comes in. Nasdaq's likely to fake out or have a fake breakout here, because it's already broken out, but it's kind of failing to break out at this level. SPX has a little bit of room to go, and if it doesn't even get up there, then it's going to reject here. Then it's going to flush all the way down anyway. So either way, you're going to see that Tesla will come down. So don't chase the upside here. There is a lot more risk to reward on the downside on Tesla, and that's how I would want to play it this week, just at least for the first couple of days until we can see where this market's heading. Because as I mentioned, what's going to determine the direction of this market for this week is how we react right here where we are at the key pivot right now, all the way from 4140 to 4200, right? And the same goes for Nasdaq. How we're going to react here where we are right now is a key breakout level, and the Dow needs to break 33,500 in order to get bullish. So it's really going to depend on that. Okay, I hope that was helpful. So with Tesla, we're looking for pullbacks, really bearish focused trade rather than bullish focused trade. That's the most important thing here. Okie dokie, was that helpful for you guys, Lado and Natasha? Any other questions? All right, no problem. Well, let me know if you guys have any questions. I'll wait a couple minutes more, like 1-2 minutes more. If you have more questions, any other ticker breakdowns, please drop it down in the comment. I'll do it for you. Remember, Monday, Wednesday, Friday, that's all you got to take out of your busy schedule before the market opens. Attend the pre-market session, and you're going to learn a ton of things. This session is pretty much all you need for the entire trading session, and it's going to set you up in the right mental state, right? In fact, you know, I might even incorporate like some breathing exercises next time. You guys want to do some breathing exercises with me, like some ASMR? Just kidding, just kidding. Ethereum, okay, I don't typically trade cryptocurrencies, but I'll do it for you. Ethereum, let's see, Ethereum USD, is that the one? This one, right? Yeah, I think so. Well, this does, to me, on first glance right here, from a technical perspective, it doesn't look like the selling is over on Ethereum. It doesn't look like the selling is over. It looks like there's more selling to happen. To me, it just looks like it's coming up to retest the dual zone right here. And this dual zone drags all the way till around 2165. Right here. So this looks like a retest zone. Sorry, a little bit higher here. There we go. Looks like it's trying to break out. And of course, right now it's in kind of a bull flag kind of style. Now, the real test for Ethereum is above it. It needs to break all these key pivots here. There is a pivot at 1800. There's a pivot at 2000. These two pivots. There are two specific levels here that this thing needs to break before it actually turns bullish. So 1800 right here, and then 2000 pretty much here, right there. It needs to break these two levels. So I would say play it pivot to pivot. If it rejects here, then it's going to the next pivot. So then you're looking at a retest of at least 1500. So downward here, and then it may bounce. So you got to play pivot to pivot here on Ethereum. Why not, right, T? Nothing to lose to try out breathing exercises. Absolutely. So in case you guys don't know this, I actually do breathing exercises before I trade. It's absolutely imperative that you do calm your mind before you trade. There are two things. Actually, wait, hold on. Three things that makes a successful trading session. Number one, having a calm mind, not letting last week's performance affect this week. One of the ways to get there is breathing exercises, okay, and manifesting the success that you're about to witness unfold in front of your eyes. Visualize the fact that you about to kill it and make some good money in this market. The first step is always your mindset, nothing else. Trust me, the biggest thing with trading is mindset, nothing else. Anything else in terms of mechanics and in terms of knowing knowledge and stuff like that, it can actually come later. What you really need is the mindset, first of all. The psychology behind trading is so much more important. Second thing that you need is exercise, okay? You got to get some kind of steps in. You got to be exercising. You got to get blood to your head, because trading is a very intensive process. You are using a lot of neurons in your head, and you're firing on all cylinders throughout the entire session. Okay, you need to really get your mind in the right focus stage and in a relaxed, calm mindset. And the third thing, before you start trading, eat something. You have to eat something. Your brain's neural pathways are powered by glucose and carbohydrates. It doesn't mean that you go and, eat like a freaking Snickers bar or something for breakfast. But what I'm telling you is have like a slice of toast, have something like, just anything that has carbs or it has glucose that will convert to glucose. It doesn't, and obviously eat it in moderation, because the last thing you want is a sugar crash. So have just a small bite of something that's going to get you into the zone, okay? Because your brain uses glucose in order to process neurons, and when your neural pathways are firing, and it has an electroconnectivity going through your head. Your synapses are going off, right? That's all being processed with sugar. So you really have to have a good meal before you start trading. Don't do it on an empty stomach. You're going to get yourself, first of all, you'll feel lousy. Second of all, you just won't be able to concentrate. So have a good meal, have an exercise, have a little bit of exercise, and keep your mind clear. Okay, I hope that you guys have a great trading session today. I'm going to be off trading with my team on Discord right now. So I'm going to brief them on the pre-market stuff that I'm watching for this week. We have about 5 tickers that we're watching on the snipe list. But I will see you guys back on Wednesday. I hope that you guys will have a great week ahead. See you guys back on Wednesday for the pre-market stream. And take care till then. Love you all. Thank you for attending the stream once again. And smash the like button if you can on the way out. And yeah, appreciate it, guys. Take care. Peace.